Good morning, and thank you for joining us today. I'm Taylor Combeluzier, a mining analyst at Red Cloud Securities. Today's webinar features Cordoba Minerals, which is a mineral exploration company that is advancing its San Matias copper, gold, and silver project in Colombia, which includes the Alacran deposit. Cordoba recently signed an agreement to jointly develop the Alacran project with JCHX Mining Management, which purchased a 50% interest in it for US $100 million. A PFS for the Alacran deposit was completed in January 2022 with positive results. Infill drilling recently wrapped up that showed that the potential for high-grade zones exists within the Alacran resource model, and results are expected to feed into an update of the mineral resource and the mine plan before a feasibility study. The company also owns an interest in the exploration stage Perseverance project in Arizona. Today, I have with me on the webinar Sarah Armstrong Montoya, who's the President and Chief Executive Officer at Cordoba, as well as Mark Gibson, who's the Chief Operating Officer. The format of today's webinar will be comprised of two parts. In the first part, Sarah and Mark will provide an overview of Cordoba Minerals and then focus on the feasibility study technical work program and the upside opportunities. In the second part, we'll take your questions live, so please submit your questions using the chat and we'll get to as many as we can. You can type your questions in at any point throughout the presentation. To start, we'll handle the disclosures and then get into the presentation. So for Cordoba Minerals, there may be some forward-looking statements made on this call. I would direct listeners to the cautionary note on page 2 of the corporate Cordoba presentation located on the company's website. For Red Cloud Securities Inc., I would highlight that this webinar is for information purposes only and should not be considered a solicitation to purchase or sell securities or a recommendation to buy or sell securities. And we note that this call does not take into account the particular situation or needs of individual investors. Participants should rely on their own investigations and seek their own professional advice before investment. Please see our most recent research located on our website for Cordoba-specific disclosures. So with that out of the way, I'll turn it over to Sarah and Mark to give you an update on Cordoba and what you have to look forward to with the story.
Thanks for the introduction, Taylor. Good morning, everybody, and thank you for joining us today. So Cordoba is a copper-gold developer. We have two flagship projects. As Taylor mentioned, we have the Perseverance project, which is in Arizona, and that's an earlier stage copper exploration project. And we also have the San Matias project and the Alacran deposit, which is a copper, gold, and silver project in Colombia. That's about 70% copper, 27% gold, and a 3% silver credit. We have two major shareholders, one of them being Ivanhoe Electric with over 63%, and we also have our strategic partner, JCHX, holding a 19.9% interest at the public company level. As Taylor just mentioned, we did just close a deal for a $100 million investment by JCHX for a 50% interest in the Alacran deposit. That investment is at the asset level, so therefore there's no change to their shareholding at the public company. We do have our feasibility study underway, and we did just announce that we have completed the initial phase of our infill drilling, and Mark will touch a little bit on that a bit later on. So over here on the right-hand side, you can see our shareholding there that I mentioned earlier. Ivanhoe Electric's at over 63% and JCHX is at 19.9%. You can also see our market cap is around 44 million Canadian dollars, so there is a real disconnect, especially considering we just closed $100 million investment with JCHX, and with the results we announced last year for the PFS as well, giving an after-tax NPV of $415 million. On management, both Mark and I have been with the group for over a decade in various companies in various positions, and Charles Forster, our VP of Exploration, is also a long-timer with the group. A very experienced board of directors. We have some technical guys on there, and we also have Dr. Pong. He has the seat for JCHX, and we have Luis Valencia, who's a Colombian businessman with strong government ties. Over to you, Mark.
Thank you, Sarah. So the project's in the northern part of Colombia. If you look on the map on the top right-hand side there, you can see that we're fairly close to two operating mines. One of them's a coal mine. The other one is Cerro Matoso, which is a nickel mine. So there's a lot of facilities, a lot of the infrastructure that we need to develop a mine is already on our doorstep. But most importantly, the people and the communities that we're going to affect, they know mining, they support mining because they've seen the benefits that accrue with mining. So that's a really good introduction. We've got a large land package. A fraction of it has been explored to date, but the good news, of course, is that we've already got mineralization, 102 million tons at 0.41 copper, with good precious metal credits, and that's what we're taking through to our feasibility study right now. We did a pre-feasibility that we released at the beginning of last year, and that had very encouraging results. So it defined a $415 million NPV using modest metal prices and with very fast payback, 2.2-year payback. And that's because this is a really simple deposit. If you look on the right-hand side, the bottom picture, everything is outcropping at the surface. We've got nice high grades close to surface. And so the cash flow that you get in those early mining years is very good. And that's what we've been drill testing and releasing to the market most recently. So currently we're underway with our feasibility. We've completed the initial infill drilling that was going to be 25,000 meters, and I'll touch on that shortly. And we're currently still doing our engineering studies, resource upgrades, and the EIA, which is going to be one of the 2 government permits that we need. We released the PTO to the government late last year, and we're expecting them to give us feedback on that imminently. Next, please, Ran. So this is the pre-feasibility results. We at $3.60, which was the baseline price that we used, we were defining a $415 million after-tax NPV, and that was with $435 million of upfront initial capital expenditure. At current prices, you can see that we would be just below that $700 million NPV, with copper trading just above $4 right now. It is quite a price-sensitive project, but obviously the higher the copper price goes, the more you're going to see really decent returns from this project. Next, please, Ryan. So what we're doing with feasibility is touching on some of the areas that we felt still had room for improvement with the PFS. We had not done enough drilling, we felt, for the sort of resource confidence that we needed. So we defined a 2-part drill program, an initial 25,000 meters, which we've now completed, and that was targeted at the high grades that we suspected were within the village. That sits on top of the Dior deposit, and then another 15,000 meters that was to be towards the margins of the deposit, the lower grade, and the later mining years. So we've already done the most important drilling, and we're going to be doing the rest. More metallurgical studies were needed, because while we had some really good results, you can see 92.5% recoveries from copper, we felt that we had not tested all of the variability within the ore body, so that is still ongoing. We're still looking at opportunities for trading off between CapEx, OpEx, and NPV. The PFS used a pretty fast through rate of 22,000 tons per day, and we think that by reducing that slightly back towards the 16,000 that we defined in the PEA, we might be able to get some decent CapEx savings. We're still looking at finalizing some of the sites for plant electrical power supply, because those are obviously need to be linked into future construction and financing. So those will be the final designs that we get. And most importantly, we are very acutely aware of the risks that come with tailings facilities. So we're defining using something called thickened tails, which mixes the waste rock with a cemented backfill, and that produces a very stable mass of material at the end of the mine life, and none of the risk of the sort of collapses that you've seen elsewhere. So to date, we've now completed 27,500 of the 25,000 meters that we defined for our infill drilling. That was really focused on the core of the deposit, which historically had been undersampled. And the reason is that there's a small village sitting on top of the ore body in that location, so historically we couldn't drill. So Sarah and her team in country had negotiated access to that, and so we used that access to put as many drill holes as we could, as quickly as we could, and the results have been fantastic. You'll have seen over the last 3 months we're regularly releasing more than 100 meters of more than 1% copper into the market. And that is coming from 2 main layers that you can see in the section on the bottom right there. There are 2 high-grade enriched packages. The one is at the base of what we call Unit 2, and the other is at the top. The one is a mudstone, and the other is a tuff. Both of them are quite carbonaceous, very receptive to mineralization, and both of them sometimes are actually almost semi-massive or even massive sulfides. And the great thing about that, as you can see, is that they're very close to surface. So this means that the early mining years, 1, 2, 3, 4, you're really going to be in more than 1% copper very, very quickly, and metallurgically it's very simple. So this thing's going to really produce a lot of cash in the early mining years, which is absolutely fantastic. We still have some decent high-grade carbonate-based metal vein mineralization to look forward to. Those are constrained within these north-south trending high-grade domains. So while the CBMs themselves are quite unpredictable, the zones that they are hosted by are more predictable. So we want to bring them into the future resource update as a subdomain. Next, please, Ryan. So yeah, these are some of the highlights. Drill intersections, and you can see long intersections of well more than 1% copper equivalent, and even within that equivalency, we're still more than 1% of copper itself, with 0.5% equivalent of precious metals. So it's really producing the goods, Alacran. It's great to see that, and the photo shows some of those nice high grades that we're seeing there. So very exciting to be getting that, to predicting that and then intersecting it. So Sarah, do you want to talk about JCHX?
Sure. So as we mentioned, we just recently announced in December that we signed with JCHX. So $100 million for a 50% in stake in the Alacran project. The payments do come in tranches. So the first payment we got was a bridge loan, and we received that in December. That was for $10 million. The second payment of $30 million comes on closing, which we anticipate to be at the end of Q1 of this year. And then from that, the next installment is a $40 million payment, and we get that following our Cordoba board approval of the feasibility study and the filing of the EIA. And then there is a final payment of $20 million. That is conditional upon the approval of the EIA within 2 years of the closing date of this transaction. So if the EIA is not approved within that time period, JCHX will then have the option to make that $20 million payment or not. And if they don't, they will be reduced down to a 40% interest, and we will have a 60% interest. Cordoba maintains control, and we are the operators of the project. We also have 2 of the 4 seats of the board, and then we have a third seat, which is chairman of the board, and with a casting vote there. And the other thing is that JCHX have a right of first offer over the EPC and the offtake agreement. So we can, if they're not great or we're not happy with them, we can go out to market for a competitive tender. But then JCHX do have the right to match that, and the offtake on those same terms is a right to up to 100%, and that is from the current feasibility study. So that would be if we did end up finding a porphyry or to grow this, that offtake would not apply to that. Next, please, Ren. Social and environmental governance. So we have 12 communities within the area of interest. As Mark mentioned before, and I think on the first page of our presentation, you would see the green hill, and at the bottom of that, there are a bunch of houses there. So that Alacran community will need relocating. They're the only one. Previously, we thought that we needed to relocate a couple of other communities in year 7, but that's no longer the case. So it's only the one community that will need to be relocated. We have a team of professionals on the ground there at the moment, 19 professionals, psychologists, sociologists, lawyers. We also have their own advisors that they picked for the Alacran community to go through all of this process for the relocation. We also have been working with SENA, which is the National Training Centre of the government, to upskill workers, and to date we've upskilled about 180 workers for those who want to want employment with the company. Yeah, next please, Ren. Okay, back to you, Mark.
Great, thank you, Sarah. So Perseverance is the other project. This is an Arizona-based porphyry exploration project undercover. So quite different from Colombia and the Alacran project. So it's a partnership with Bell Copper. We've already got 51% and with the right to go up to 80%. And this is going to be a geophysically led program. We did the deal in 2018 with Bell Copper. You can see we're into phase 3 right now, and essentially we need to be spending $3 million by the end of April of next year to trigger that, and then the phase 4 will be an additional $10 million. So our thinking right now is to be doing some geophysics followed by some more drilling. We are at the border between the Colorado Plateau and the Basin and Range Provenance, and that's quite significant, so I'll explain that in a moment, but we're on trend for the main porphyry belt in Arizona. So this story goes back actually quite a long way to the 1950s. There is a root of a porphyry system exposed at the top of a mountain. The yellow is only seen in the bottom left there. And that most geologists who went there said you've got the root of a porphyry system at the top of a mountain, therefore it's been eroded away. That's all of the good stuff's gone. Dr. Tim Marsh, however, he was with Kennecott previously. He recognized that there's a lot of this basin and range faulting in that valley, in that zone. So just as likely a geological explanation was that the porphyry had been faulted and carried to the northeast into the basin where it's been covered by gravel. So he's been testing that theory over the last few years, sometimes with his own money as Bell Copper, sometimes with partner money. Rio Tinto partnered on this for a bit, and we're currently funding that. So we've drilled a couple of holes, K20, 21, and 22. These are the ones up on the northeastern side there. We've done some geophysics, some magnetotellurics. They defined very attractive anomalies, but those anomalies turned out to be mostly due to clay. The good news about the clay is that it's related to fluid movement, and those fluids could be mineralizing fluid movement. So our suspicion is still that what we saw in K20, the porphyry margin that we saw in K20 has not been sterilized by the drilling that we did last year, that we still need to go back into a bit more. So the idea is to go with our own geophysical system, Typhoon, that's the parent company Ivanhoe Electric System, do some work there to find some new anomalies that are less going to be less affected by that clay response, and then drill test them in due course. Back to you, Sarah.
Thanks, Mark. So you can see here with our targeted milestones, we have the JCHX transaction up the top. And as I mentioned, we're targeting to close the deal at the end of the first quarter. And then our second installment, that $40 million, will come on the filing of the EIA and the approval by our Cordoba board of the feasibility study. And that final payment of $20 million would come on the approval of the EIA. And then we have here down the bottom, you can see the second half of 2023 for the completion of the feasibility study and the EIA. For Q1 of 2024 to 2025, we're looking at detailed engineering. And then between 2024 Q3 and 2026, we're looking at mine construction and going into commercial production at the end of 2026. And then, as Mark just mentioned, now with the Perseverance project, our aim is to run Typhoon and define our drill targets, and move on to our exploration program in this year. That's all from me. Thank you, Taylor.
Great, thanks a lot, Sarah and Mark. Great presentation. So now we'll turn to the Q&A portion of the webinar. And just a reminder for everybody on the line that you can type in your questions to the chat, and I'll throw them at Sarah and Mark. So we've had a couple come in so far. The first one here, talking about San Matias, there's only 1% exploration done. What will the following steps look like for the other 99%? And is there some kind of timeline? Is there something that indicates the structures are running through the property?
So the focus of the company right now, using the cash that JCHX has provided, is to complete the feasibility study. So Sarah can comment further on this, but any work that we do on the properties that are not in the JCHX deal will have to be financed separately. That financing has not yet happened, so there is no timeline on continuing those exploration programs. So we're keeping all of the properties in good standing, but that has to be a question that is, I think, as the feasibility study draws towards a conclusion, the focus will naturally turn towards getting the necessary exploration work done.
Right. Okay. Perfect. And then another question here, just wondering about what I'll just read out here. What about the Canada-Chinese issues for strategic mining? Will there be issues concerning that matter? I know we've seen some issues in the lithium space in particular. Wondering if you have any comment on that.
We did have an initial conversation when we were doing this transaction, and we were told that it wouldn't be an issue, but I think everyone is aware this is rather new. The issues that we have seen, as you just mentioned, are in the lithium space. It hasn't been on copper, and we are maintaining control of the project. We're not it's 50% at the asset level. So initial conversations indicated that it wouldn't be a problem, but I think it's just something we need to wait and see. I think this is a very new space. It's a very new space, and so we really need to wait and see what happens.
Okay, sounds good. So I guess sticking with the transaction, maybe if you can just obviously there's a nice investment there. What else does this deal give you in terms of access to technical expertise or strategic support? Maybe just highlight some of the benefits.
Sure. I mean, JCHX are EPC contractors. They at Kamoa-Kakula they came in under budget and ahead of time. So they're a great partner for us. It's one of the reasons that we had them in as a strategic partner at the public company level. So we'll have excellent support there and people who have got experience in building mines. So I think that's a huge benefit of having them as part of this project.
Excellent. Okay. And you had that nice slide where you showed kind of the timeline of that you'll get that $100 million upon milestones being completed. Maybe just talk a little bit about on the flip side, like what's the use of proceeds look like? How is that going to be deployed?
Well, the use of proceeds has to be for, as Mark just said, it has to be for the Alacran deposit. So there were the Alacran deposit. So it's Alacran and Alacran North and the 3 satellite pits, and it's really that area where that covers all of the infrastructure for the Alacran project. It's the titles covering that area. So all of the spend has to go into these related expenses. And as Mark said, so we can't use that for Perseverance. We can't use it for our greater exploration, land package. That they would be subject to separate fundraisers. It's all to develop. So the idea with this cash is for us to be advancing through the feasibility study and the EIA in order to get this licensed. Mark also mentioned before, there are two permits we need in Colombia to license this project. One is the PTO and the second one is the EIA. And so that's really what our main focus is. This money should take us through to sort of the start of construction. So obviously, as per the PFS, we need over $400 million as initial capex to build this mine. That may change with the feasibility study, but the money will really be taking us through to that point.
Perfect. Okay. And then with mentioned the Alacran deposit itself, but the kind of satellite deposits, is the plan still to incorporate those into the feasibility study?
I'll let you answer that one, Mark.
That's a very forward-looking statement, Taylor. They will certainly be incorporated into the resource as per the PEA. Because they are pretty marginal grades, the best that we could look at is bringing them at the end of the life mine, so they're not going to be material.
Okay. So we have a question here. Just wondering a bit about, maybe comment on the share structures. We have a viewer wondering how come there are only so few shares being traded. The viewer likes the work that's being done so far in the grades, etc. Just maybe if you could talk about the share structure.
I mean, my view on this, we have very, very little liquidity. We have 2 shareholders that have over 83% of the company. And it's something we're aware of that, in the future that there will need to be some sort of dilution, but that's really what it is. We have very, very little liquidity and very little public float.
Right. Okay. So question kind of from my end, I think the last time we did one of these webinars, it was last summer, right on the cusp of when the new president in Colombia was coming on board. There's a lot of apprehension about that from investors. Maybe just it'd be interesting to hear your perspective on kind of what's transpired since he's been in and kind of what your outlook is.
Sure. We've had great support from the new government, from the A&M and from the Ministry of Mines, and also ANLA, which is who licenses us for the environmental impact assessment study. But we really haven't seen any of the impacts yet. There's not really been any changes since, and I think everybody's still waiting to see what that's going to look like. So until now, everything sort of continued going along smoothly. I think one thing is to be in campaign, and the other thing is to actually have office and affect the changes that you wanted to do, and that doesn't always happen. So we haven't seen the impact yet. I think everybody really is waiting on that. In particular, sort of that's the feeling from other juniors in Colombia as well, and other exploration companies. They're all sort of waiting to see what happens with this new government.
Right, and there's a lot of kind of a mix in terms of Congress, etc. So he can't just plow through his own agenda. The power structures and really set up that way in the country. Right.
Correct.
Perfect. Okay. I don't think we have any other questions that have come in here. So maybe I'll just give you kind of a last word or a last pitch to investors, and we'll see if there's any last minute questions that come in.
Sure. I think Mark alluded to this before. This is not the largest project. It's a modest size, but it is something that we haven't found any nasties that would stop us from getting this into production. In terms of timing, this is something that we could realistically have in production in 2026, which in terms of mining, that's relatively soon. I think we are now funded, to take us through the feasibility study and the EIA, which is extremely positive. Markets haven't been great, and it was a huge feat for us to close $100 million investment in these market conditions. So I think we're sitting in a really decent position to be able to take this project forward into the next phase.
Great, yeah, and I think right now, even with China opening up and everything, the copper price is doing much better already. So I think sentiment's will start to change. So good timing on everything right now. So with that, I think we'll leave it there. We don't have any other questions that have come in. So I'd like to thank Sarah and Mark from Cordoba Minerals for taking the time today to host the webinar with Red Cloud Securities. And thank you to everybody on the line for tuning in with us.
Thanks, Taylor. Bye-bye.
Thank you.
Yeah, bye now.